Welcome to the On the Rise podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice. I am not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. All right, welcome back On the Rise podcast listeners. Thank you again for jumping into yet another episode of the On the Rise podcast. So glad you're here with us again today. I've got another amazing guest. I've got Ben Reinberg. Ben, welcome to the show.
Thank you so much, Jeremy. I appreciate it coming on. I look forward to adding a lot of value to your audience.
Yeah, I am as well. Looking forward to chopping it up with you here. So Ben is a prominent figure in commercial real estate acquisition and investment, and a widely recognized expert in development and structuring commercial real estate transactions. So Ben, you've got a background in kind of, acquisitions, transactions, equity sourcing and capital raising. You pretty much kind of cover the gist from acquisition all the way through disposition. So maybe if you don't mind, let our listening audience know a little bit more about, Ben, your journey, what you're focused on today, et cetera.
Well, my background is I'm originally from Chicago, born and raised in Chicago, and I wanted to see, Jeremy, how to build wealth. And I determined building wealth from doing my research. There was no internet at the time, Jeremy, that building wealth I had to do through hard assets. That's what wealthy families have had to do. And if you look at my new book, Hard Assets and Hard Money for Hard Times, it's specifically on how to build a hard asset empire, because that's what I did and that's what I realized I had to do. So with that being said, that's what I do. I build hard asset empires with commercial real estate. So we have outside investors that invest with us, high net worth individuals, as well as family offices that invest with us. And we have people from all over the world that invest with us. So I am an office, industrial, retail, and multifamily expert. We're one of the leaders in medical office. We're headquartered in Chicago. I sit in my West Coast office in Newport Beach. We have different offices and staff around the country. And at the end of the day, my goal was, how do I build wealth? How do I support my family? How do I grow my family? And how do I get great tax benefits? And all through that ended up being commercial real estate was the answer.
Yeah, it makes total sense. So, I mean, you're really kind of, bought into this concept of building true generational wealth with tax benefits, assets that cash flow, assets that are a hedge against inflation. Why is it that the traditional, investment methodology, through Wall Street and paper investments, how are those types of investment vehicles really falling short?
Well, because hard assets can sustain themselves through any period of time, whether it's liquid assets to non-hard assets like crypto and other things. They're volatile. Hard assets is you get consistent cash flow, you get great tax benefits, and it produces income through the test of time. Even through chaos, Jeremy, it is producing income, cash flowing assets. So that's why I love what I do. And it's a marathon business and it makes a lot of sense. It's you're able to secure and control your destiny. And that's what's important.
Yeah, absolutely. I couldn't agree with you more in that regard. I'd really like to unpack, where we're at in the market cycle right now as it relates to, hard assets or, correlated assets. There's been a lot of headwinds lately within the last, 2, 3, 4 years that has pained a lot of investors, quite frankly, and it's kept a lot of, capital or dry powder, on the sidelines. So what would you say this time period right now? We're sitting in Q1 of 2026. What makes this period of time different from maybe prior market cycles that you've lived through?
Well, this cycle is we have trillions of dollars of loans coming due, which we haven't seen in any cycle. And with that being said, it's an important fact to say, okay, well, this is what has to be done. And what has to be done is you have to have the ability to hold in this cycle. You need to be able to say to yourself, okay, well, I need to be able to protect my assets. I need to have a portion of my portfolio in hard assets and understand that in order to protect my portfolio, I need incomes that can produce cash flow during the test of time. The other misnomer is people think that hoarding cash is the answer to everyone's problems. It's actually the opposite. You need to be investing in hard assets and not hoarding cash. It's a misnomer out there because when you're hoarding cash, you have cash in the bank with institutions and banks, Jeremy. One thing that happens is you lose opportunity costs. You're dealing with inflations and taxes and geopolitical risk. And so, with all that being said, it can cause chaos in your portfolio if you don't have a portion in hard assets.
Yeah, that makes total sense. And as it relates to that kind of portfolio discussion, when it comes to interest rates, debt or loan to value, inflation, geopolitical environments, right, or risks, what would you say is kind of the main risk factor that you as an investor are looking to mitigate against, in 2026?
Well, as an investor, we're looking for things like medical properties that we invest in. Why? Because the human body is never going out of style. So, Jeremy, what's really important to us is where can we put our capital, investors' capital, in spaces that can produce cash flow and that are recession and pandemic resilient? Well, medical office is a great space for that.
Yeah, that makes total sense. Now, I know that a good part of your kind of overall investing thesis is also centered around helping support, other investors. With that said, how do you typically go about building, trust with potential investors, when you're dealing with such high stakes, transactions like real estate, whether it be medical office or commercial multifamily?
Well, I mean, for us, when you look at it and you say, okay, well, how do you raise equity, right? Well, how you do that is with a solid track record, with transparency, with a great leadership team. We have 250 years plus of a leadership team. We have a great platform. We give a 7-star experience to our investors. So at the end of the day, consistency matters in your communication, how you approach your investors. You got to tell your investors the good and bad. And so we do webinars and we do all different things to educate our investors, which allows them the ability to say, hey, I feel comfortable. I want to invest in medical office like our Alliance Medical Fund.
I'm Zach Captainstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
Yeah, that makes total sense. There's a lot of investment, options out there. All I have to do is wake up in the morning and open my inbox, and I've been presented with, 3 or 4 other alternative investment options. I would say that's predicated upon the fact that people see what I'm posting out on social media. They grab my contact information and they spray and they pray, different investment opportunities, to me. What would you say, for the investor that's listening to this podcast episode today, what's kind of the one non-negotiable pillar, you would leave somebody with so that they basically need to fully understand, before deploying capital into any operator's alternative investment option?
Well, know the people you're doing business with. Understand who they are. How do they deal with challenges? I always say the person that can deal with a challenge, some people label as a problem, that's the horse I'm riding on. Because anyone can pay you, Jeremy, a preferred return every quarter. But the fact is, when someone can say to you, this is how we're dealing with the challenge and overcome it and produce a great investment, that's what we do as a company. Not everything's going to go well. So you have to be transparent and you have to tell people the way it is.
Yeah, that makes total sense. Outside of the transparency, the last, probably 2, 3, 4 years, it's been very difficult for operators to raise capital. That cost of capital, has definitely increased. What really separates, capital raisers who consistently win from those that are really struggling in the space today?
It's really the track record. It's it's the work ethic. It's really putting in the time to raise equity. It's a 7-day-a-week job, and you got to get out there and hustle. And you got to work on your craft, and you got to work on yourself. And that's what's important as you're raising equity.
Yeah, that makes total sense. For those that are sitting on the sidelines right now, speaking specifically about, maybe those investors that, have a significant amount of dry powder or cash, on the sideline, kind of waiting, in the wings for that next opportunity, how should they really be thinking about kind of investment timing, right now in Q1 of 2026, versus remaining on the sidelines for the market to shift?
I think you want to put capital into hard assets right now. There's great opportunities. Yeah, I mean, if things change, absolutely, you want to double down and invest more. But right now, it's a perfect time to invest in hard assets and diversify your portfolio, Jeremy.
Yeah, I fully agree with you on that. I think, the financial advisors talk about, dollar cost average, right? Of course, in Wall Street, you want to buy a stock low and you want to sell it high, right? The same can be true, with commercial real estate, assets as well. We don't really know what the future holds. We know we can mitigate against operational risk and execution risk, but it's oftentimes not we can't always solve for market risk. We can certainly help mitigate and protect investors from that downside, but we don't really know what or when that next black swan event is going to be. Does that resonate with you, Ben?
Yeah, it does. I mean, one of the things that I always make sure of is we're constantly in the market looking at the market. But we've been through all different types of cycles, and hard assets have continued to sustain themselves throughout the test of time.
Yeah, it makes total sense. Now, I know in your book, Hard Assets and Hard Money for Hard Times, such a great cover for a book. We obviously have a glimpse as to what, that book is about, but maybe you can, leave our listening audience with a little bit more about what they'd uncover grabbing a copy of your book.
Well, what they're going to learn is how to build wealth. And I'm going to give you war stories. I'm going to explain to you about your mindset. I'm going to talk to you about things that you need to do to build your hard asset. We have a hard asset empire blueprint in the book that you could download free for your audience today. You can go on my website, benreinberg.com, and download it for free. So you're going to learn how to build wealth, and you're going to learn a proven strategy that's been forged in the fires between me and my colleagues. And that's why you buy the book. If you want to go a step deeper, you can go on to benreinberg.com and take the courses after you read the book, which will bring the book to life for you. So I wanted to make it actionable and visual, and that's what I've done.
Yeah, no, I appreciate that you highlight the education and the action side of this, because I think all too often, people maybe know where to go find the information that they seek. There's plenty of educational topics out there. You mentioned your book, your blueprint, and so forth, but all of that doesn't mean anything unless the individual actually takes action upon what they've learned. So what would you say to that individual investor out there today that maybe is kind of stuck with analysis paralysis or paralysis by analysis?
Well, I mean, Jeremy, you're not always going to be right. Okay, you're always you're going to second guess yourself. But if you adhere to the real estate principles in your underwriting, what's market rent? What's vacancy? Do I have the ability to hold? Do you have enough reserves? The key to commercial real estate is the ability to hold, the ability to hold, and the ability to hold. So I have to be able to ride through tough times, which you can see in my book. And by doing that is having the ability to hold. Flexible lending, reserves, etc. These are the things you need to consider when you're underwriting and looking at different deals.
Yeah, it makes total sense. Earlier in this conversation, you highlighted the leadership and the leadership style. How important is it that the operator, the person that's making the ultimate decisions, how important is it that they are a leader that knows how to lead a culture, an organization, cast a vision? Because at the end of the day, it's not always the main operator that's executing the business plan on the day to day. They're hiring talent to do that. So how important is it, that the leader at the top is able to create that positive, winning culture?
Well, I think it's key. I mean, a lot of people say, how do you deal with leadership? What is a good leader? A good leader is someone that inspires and listens. So you have to be a good listener when it comes to leadership.
Yeah, totally. And a topic that resonates or comes across more often now than I've ever seen before, and that is this kind of topic of due diligence. Everybody talks about, well, you got to do due diligence on the financials, on the pitch deck, on the operator. But I've started to hear more and more people talking about doing due diligence on the heart of the operator as it relates to things like character, integrity, and trust. How important are those types of characteristics to you?
Oh, it's everything. Integris is everything. It's, telling people the good and the bad and the ugly. And you have to. Not everything's going to go well. So you need to be transparent.
Yeah, no, I couldn't agree with you more. That's one thing as a seasoned investor myself that I'm looking at a lot more, and that is the intentionality. Things like character, trust, really centered at the heart, of the operator more so, than I would look at the pitch deck or even the track record, of the operator themselves. So, Ben, what might be maybe one or two different other ways outside of grabbing a copy of your book and grabbing a copy of your blueprint? What might be another one or two different ways that our listening audience can connect with you to learn more about what you're up to?
Well, if you want to invest with us, go to alliancecgc.com. You can click on invest now and someone will reach out to you and you can start learning how to build a hard asset empire. If you want to learn more about me, you can go to benreinberg.com. You can buy the book, Hard Assets and Hard Money for Hard Times on my website. You can also download the blueprint for free. And then also you can learn how to invest with us too on my personal website. And so you could take courses. You could really do a deep dive. How do you build a hard asset empire? But if you want to invest, which a lot of people realize, how do I end up investing with Alliance, my company? Go to alliancecgc.com.
That's great. Well, thank you for that. We'll put that in the show notes for the episode. Ben, really appreciate the tremendous value that you've brought our audience today.
Thanks, Jeremy. I appreciate being on.
Of course. And listening audience, thank you again for jumping into yet another episode of the On the Rise podcast. I look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the On the Rise podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decisions, please consult with a professional. This show is copyrighted by the On the Rise podcast. Written permissions must be granted before syndication or rebroadcasting.